Hey everyone, and thanks for jumping back into the cryptoverse. This is your weekend premium video. Hopefully you enjoy the content. In this video, I want to first talk about two recent charts that we've added to the website, and that is the gross domestic product and the real gross domestic product. And of course, that is a sector of the macroverse. Now, I do understand completely that the macroverse is not necessarily everyone's favorite universe to be in. However, I would argue that you owe it to yourself as an investor to become more acquainted with the macroverse if you're not, because it can help a lot to better assess whether we are looking at a risk-on environment or a risk-off environment. It could probably help you figure out if you think we're looking at, say, like a bear market rally, or if there's actually real reason to be bullish. And as you guys know, in 2022, I continue to just say cash is king, and it's for a couple of reasons, right? I mean, it's not just because of the macroverse, but it's also because that's what the charts have told us in the cryptoverse, right? A lot of the charts have suggested that this will not be a good year, and you couple that with what's going on in the macro scene, and it just makes it so difficult to assume that we are anywhere close to being back in, say, like a sustained risk on market. Again, I'm not talking about rally, like, short-lived rallies. We've had plenty of those, but this is at least how we can help manage our expectations. Now, if you want to go find it, you just go over to macroeconomics. You can click on gross domestic product, and you can see we also have recessions shaded in gray. If you don't like that, if you don't really care about where the recessions are, you can always just click on it and it will remove them. But it'll show you what the U.S. gross domestic product is quarterly in billions of dollars. But more importantly, what's useful is to say look at the quarterly change, right? And you can also, of course, apply moving averages as well if you would prefer to do something like that. But the point that I would like to really sort of address here is if you go over to real GDP, you'll notice, and we've talked about this before, and if you go over to say quarterly change, you'll notice that we've recently gone negative, right? If you zoom in over here, you can see that Q1 came in at a negative, and then of course Q2 came in negative as well. And there's actually some recent data now coming out of the Federal Reserve and the Atlanta Fed, and they're actually suggesting, or they're predicting that the GDP for Q3 has actually gone up back above, I believe, I don't remember, 2.4% is the most recent estimate. We'll see where it actually ends up, but this would actually get us back into positive territory. Now, the thing that you need to remember is that the Fed they're not that worried, just about real GDP in terms of calling it a recession, right? We know they're more interested in unemployment, and they're also interested in getting inflation back down to their target of 2%. But these are important things I think that we should all be focusing on, and know that they have been added to the website. So we're building out a macroeconomic section, and hopefully, you can just quickly come in here, and if you want to check in on inflation and say, all right, well, inflation's still high, you can go look at the effective interest rate and say, oh, well, inflation is still high, the Fed is still raising rates, unemployment is still low, therefore there isn't a clear and obvious sign just yet that the Fed will pivot. And even if they do pivot, history shows us that doesn't even necessarily mark a sustained bottom. Now, could it be a short-term bottom, a local bottom for a few months? It could, but what's more important is not, the future Fed pivot, of course, will be of some relevance, but it's also to the extent that we have to look at companies and to see how far did the Fed go? Did they go too far where they're pushing us into a relatively deep recession where earnings for a lot of these companies come down quite significantly? And I mean, the Fed can't do anything about that if the damage is already done, because the interest rate hikes take potentially up to like 12 months for it to truly be felt in the economy. So we're likely going to be feeling the effects of all these rate hikes in 2023. And that's why I've often said, 2023, I do think will be a good year to get some good deals, not only in the cryptoverse but also in the equity verse as well, and probably in some other places too. But I hope you guys are enjoying the us building out the macroeconomics page, and we will continue to to do more of that. I also wanted to spend a few minutes in this video talking about the social risk, because it is, I mean, I think it's currently coming in at 0.3. Yep, it's still at 0.3. I checked it an hour ago or so. So the social risk is coming in at 0.3. And I've been pretty adamant that I do think that this risk metric will continue to slowly come down. And we can get pretty comfortable at a certain risk level for a while on the social risk, but that doesn't mean we're going to stay there forever. I mean, you can see back in March and April and May, we were stuck at around the 0.5 risk for quite a long period of time. And I did operate somewhat deterministically back then that the social risk was going to come down. And then eventually it did, and we kind of, it came down to the 0.3 level or so, between mostly 0.3 to 0.4 risk, and we've hung around there for a few months, like July, August, and September. But I do think that this will continue to dwindle. Will it happen this week or this month? It's hard to say exactly when it's going to happen. But the point is to try to identify the overarching trend that we're looking at. And what we're looking at is less and less interest in the cryptoverse. Now, you might not like to hear that, because I'm sure, as a crypto investor, you would probably prefer to say that interest is going up. However, if you have been stacking cash this year, because I keep saying cash is king, more importantly, the US dollar is king. If you have been doing this, then to some degree, I imagine you're rooting for the social risk to continue to go down. It's once people really throw in the towel that the Bitcoin dominance really starts to go up and all Bitcoin pairs go down. One thing I was thinking about, but I haven't really actually looked at this very closely before, but I did want to at least briefly talk about it. If you look at the Bitcoin dominance, okay, and where it was back in 2018, and guys, this is going to be a dubious. This is going to be a fairly dubious interpretation or analysis. So please don't try to take this to the bank. They're not going to cash it in. But if you look here at where the dominance really started to go up in a more sustained way, where it went all the way up over 60%, this move started in May. Okay, this move started in May. I think we have started that same move. Okay, I think we've started the same move that we started back in. My interpretation, as we said for the last few months, is that the Ethereum merge sort of just delayed things by a few months. Okay, we didn't have a merge back in 2018. Ethereum had its last hurrah back in April, I believe, of 2018, and then that was it until the next bull run. But what's interesting is if you look here in May of 2018 and relate it to the social risk at the time, you can see also that back over here, the social risk was trying to stay above that 0.3 level. But as you got later and later into the year, right, like June, July, August, you can see that was really where the social risk convincingly broke down below that 0.3 risk level or so. And it was during this time where I think a lot of retail investors finally threw in the towel. Okay, they've been buying the altcoin dip, bear market rally, counter trend rally, right? Every single time people say it's the bottom, it's not, right? Like, it's not the bottom. And then the asset keeps going down. And you can see that after we really broke through here and the social risk made that final plunge over the next several months down to new lows, you could argue that it was at that point that the dominance really started to shoot up. I think I think we run the real risk here of seeing something like that play out again. Now, one way that you might expect that to play out is not that dissimilar from what we've been seeing over the last several weeks, where Bitcoin is just kind of hanging out around like the 18K level up to all the way up to say like the 22K level. And it's sort of this range. It keeps chopping around. I think eventually a lot of altcoin investors during this bear market, they're just going to simply throw in the towel and say enough is enough, and they just won't be able to sustain it any longer. Now listen, I'm not saying, like, I'm not suggesting that if you're still holding altcoins, I'm not suggesting that you should necessarily go sell them now. Like, I'm not trying to suggest that. I said back in Q1 it was time to get light on altcoins. Um, I mean, I think the time would have been back then. I'm not saying it necessarily makes the most sense to do it now, even though I do think alt Bitcoin pairs will go down. I just think the time to do it was probably back then, not waiting all the way until Q4. That doesn't mean they're not going to go down. I mean, that's still my base case, is that all Bitcoin pairs will bleed. But I just want to clarify that I'm not trying to suggest that you should do anything specific based on this analysis. I mean, I've been saying cash heavy and altcoin light for the entire, basically since Q1 started. So I want, I think it's important to really look at this and say, this does really look like we could be sort of entering the same phase where we finally had that, this pullback here. I think somewhat similar to this one. And now that the merge is behind us, and it's not something we have to, there's not any more of this FOMO going into the Ethereum merge. I think you'll slowly see the interest in the altcoin market deteriorate. Now, remember, the stock market. Okay, so we have the S&P 500, we have the Nasdaq, and we have the Dow Jones. They've all put in a new low. They've all put in a new low recently, and I even said, like, right after the Dow did, we speculated the S&P would, and then after the S&P put a new low, we said, look, guys, good chance the Nasdaq is next. And on Friday, the Nasdaq did take out its June low, and you guys know my thoughts, right? I mean, I think the next in line are some of the riskier assets. Now that these major tech stock indices like the Nasdaq have put in a lower low, you go further down the risk curve, you get to cryptocurrencies, and they haven't put in a new low yet, but I do think there is a high likelihood that they eventually will. Will it happen this week? I have no idea. Okay, I've absolutely no idea if it's going to happen this week or not. We certainly could see a scenario where Bitcoin chops around for a while as the dominance slowly goes higher. That's actually what happened in 2018. But it is hard for me to imagine us not eventually putting in a lower low because we've already seen major stock indices do it. Now, if you go back to 2018, there is, we did see that Bitcoin bottomed before the stock market to the tune of, I think, like 1 or 2 weeks or something. But I think we're, now the bottom for a lot of these major indices and for Bitcoin was all the way back in June. Now the major indices are taking out a lot of these lows. I think crypto's next in line. Okay, I don't know exactly when it's going to occur, but I would argue that that is the ultimate path of least resistance, given the macro conditions. Okay, so given the macro conditions, given the deterioration of the social risk, given the Fed's willingness to continue to raise interest rates, and they should, I think, right? I think they should, because of inflation, because of high inflation, and because unemployment is still low. I don't see the case in the short term for why it would make sense to buy altcoins, right? I just think that they're just simply not worth the risk right now. I would prefer to wait, and I will remind you, in Q3 of 2018, I did buy altcoins. And we also saw a rally in Q3 of 2018, just like we did in Q3 of 2022. And I learned my lesson back then, right? Like, I thought I was coming in, I thought I was getting a good deal, and then the market sort of just fell out beneath my feet in Q4. So I just, I want to make sure that at least my mistakes are heard by you. Whether it materializes in the same way or not, it's hard to say, but I do think there's enough evidence there to suggest that it is at least a plausible outcome that you should be planning for, even if it doesn't happen. That's sort of what I'm still looking at. I'm still looking at, the eventual deterioration of the altcoin Bitcoin pairs, and once we see that, then I will be a little bit more optimistic about the altcoin market. But until that time, I still remain resolute in my decision that I still think they're too risky right now. And I know it's taking a long time for a lot of these altcoins to really come down, but look, part of the challenging part of bear markets isn't just the price drawdown, right? In fact, if it were only the price drawdown, the bear market wouldn't be that bad, right? Like if we just went down 80% in one day, and then recovered, we put in a new bottom, and then we just started going back up again over the course of the next 2 years, that would actually be kind of nice, because then you just sort of take profits on the way up. You wait for the day that it drops 80%, and then you just start putting it back into the market, right? That's not how it works, okay? In addition to having to experience these price drops, you're forced to experience it over a long period of time. This is what gets people to throw in the towel, okay? Because they simply do not have the patience to continue to wait and wait and wait. Now, if you have the right strategy, it's not that difficult. Okay, like if you stack cash in 2022, then you're kind of just sitting back and waiting for things to unfold. Are you not? Right? I mean, if we're being honest, right? I mean, like the bias is bearish, especially for the altcoin market. For Bitcoin, I mean, I could go either way, honestly, but I mean, I'm still leaning slightly bearish on it here in the short term. But as long as you sort of have the right strategy this year, then it makes it more bearable, right? No pun intended, right? It makes it more bearable to go through this, because you're preparing for it, right? You're preparing for the deterioration of these risk markets. And so the hardest parts for you during, say, a bear market are just the counter trend rallies, right? It's just the counter trend rally that's difficult. It's like the same thing in a bull market, okay? I was a bull back in 2019, 2020, 2021. And I mean, this one right here, this was a very difficult time to some degree, because a lot of us were relatively bullish, and we said back then, like, guys, we need to go back and we need to retest the bull market support band before we all have all systems go, right? We need to go retest it. And we did, and it was a successful retest. But it took 6 weeks. It took like 6 weeks, and it was hard. Like, it was a month and a half of wondering, are we just going to break back down and have to retry again in 6 months? Or is this it, right? Like, is this the bull market? Okay? And it was the bull market. So as long as you had the right strategy over here, it was fine. But the right strategy was over here. Over here was to be heavy in risk assets, right? It was heavy in risk assets. And the biggest difficulty was navigating these pullbacks, because you're like, well, I mean, should I have taken profits or should I not? I mean, how do you deal with that? Because that's your biggest issue, is, did you take enough profits? Like, that's not a bad issue to have. In the bear market, as long as you have the right strategy of recognizing that cash is king or USD is king, the most difficult spot is just sort of these counter trend rallies, where you kind of question yourself, well, should I put in more cash, right? Like, or should I put in more cash at this phase? But really, as I've said before, I do think 2022, in its entirety, for the most, I mean, I do think in its most entirety, I mean, could we have a little pop or something at some point near the end of the year, where you could argue that maybe it's not in its entirety, maybe, but I do think in general, 2022 in its entirety will just be simply remembered as a bear market, okay? And that it easily, I mean, it could bleed into 2023 as well. So this is what I think. I think we've done a fairly good job of course, maybe I'm not objective about that. Of course, I think I'm going to do a good job doing it, but I hope we've done it at least a decent job in your view of trying to explain the reasoning for why it seems like the asset class is under a lot of pressure right now. You have the social risk deteriorating, and you have a very hawkish Fed with high inflation. Okay, under all of these conditions, it makes it relatively hard to be macro bullish. A year from now, I'm guessing I will be, getting back into my sort of like bull mode, right? Like, in preparation for hopefully a good 2024 and 2025. But we're not there yet, right? Like, we're not there yet. These markets still have time, I think, to work themselves out. Again, if we just sort of go check in on if we go check in on sort of the ROI from the peak and measured it from November, I mean, like, we're right on schedule, right? Like, we're doing the exact same thing. In fact, if we were to follow 2018, then capitulation would start in 8 days. So, I mean, if I'm getting it, guys, if we were to follow in 2018. Well, actually, you could argue it would have started um, in 2 days, but we were already at a higher ROI at that time. So from the top, this bear market has seen more losses quicker. Okay, the green line. Okay, we're further down than we were in 2014 and 2018 after the same amount of time from the all-time high. Okay, in 2018, the capitulation was only a week or two away. Okay, in 2014, it was still like a couple months away. If you go look at the running 1-year ROI, it's currently coming in at 0.4, I think, 0.396. Talked about this one all year, right? The most likely point that it could hit 0.2 or around it would be this November. It's next month, right? I mean, November is next month. So this is something that we need to keep an eye on as well. Like, are we going to see this indicator flash? I've told you guys before, like, I'd like to see them all flash. I know it's kind of greedy of me. I don't anticipate that everyone shares that opinion, and that's fine. But I'm a fairly risk-averse investor. And I've said before, 2022 is not for wealth creation, it's for wealth preservation. So, I would be a happy person if we made it through 2022, and then in 2023 I can look and say, look, all right, all the indicators flashed. Now we just want to make sure that the macro is looking better, or even if it's not immediately looking better, try to envision a path to where it could look better that would make going back into risk assets more worthwhile. So that's why I'm looking at all these indicators that still have not yet flashed. And then the other one, there's a couple others, of course, for supply and profit and loss. They have sort of been flirting with here off and on. But normally you would expect it to get this supply in loss. You would expect it to get about 60% or so, at least based on the last two bear markets, to sort of usher in a major bottom. And then finally, you would also hope to see the balance price be realized. And the balance price, or the price to go below the balance price, and the balance price right now is 16.04K, meaning unless Bitcoin in the short term goes below 16K, this indicator has still not flashed, right? Like Bitcoin would need to be below 16K for this indicator to flash, and it has not yet happened. The risk on Bitcoin right now is still coming in below 0.2. So from a macro perspective, I mean, it is still relatively decent value, but that doesn't mean we can't go lower. I mean, you can see we went lower in 2014. We went to the very dark blue areas in 2011 and early 2012. We came down to 0.1 risk in 2018. And if you go to, say, the indicator dashboard and look at the total summary risk, you can see where we currently are based on history. And you can see where the deep value area comes, right? Will we make it there? I don't know. I think we will, right? I think we'll make it there, but I can't say for certain we will. I think you should be hedged either way. But if we make it down here, then it's much more attractive in terms, for a macro investor, right? It would be more attractive because now you're saying, well, it's the exact same thing that we've had in every prior bear market when we weren't dealing with an impending recession. Arguably, we're already in one, right? But I'm just saying, like, I'm not saying, I'm just saying, you know what I'm saying, right? Of course, a lot of people think we're in a recession. There's a lot of evidence to suggest we're not in one yet, but we're probably going in one soon. Whatever you want to think is fine. But you can kind of see where we are right now and what it would take for us to really go back down into the depths of the bear. And a lot of this would probably be encapsulated within the deterioration of the altcoin market and the surge of the Bitcoin dominance. And I've said before, I think it is coming, and I think the narrative behind it will be crypto regulation. That's what I think the narrative will be. Whether that's actually the reason or not, will be up for your interpretation. But all of them, all the surges in Bitcoin dominance usually require some type of a narrative, and I'm guessing that is what the narrative will be to accompany the deterioration in alt Bitcoin pairs. So I know we've talked about this a long time. You can see Ether Bitcoin is again, it's stuck in traffic on struggle street right now. It's coming in at 0.062. ADA Bitcoin, 2,200 Satoshis. I was looking at this chart earlier and saying, I'll be a buyer of ADA more than likely again at the pits of the next bear. But look at this. Once it breaks the trend, maybe we pop above it for a while, but it ultimately, there's a good chance we have to revisit Maybe we don't have to go this low on the ADA Bitcoin pair, but you rest assured it is a possibility. But even if we don't go that low and maybe we bottom it a little bit higher than that, still seems like there's still more potential for downside. And what's interesting, if you look at this trend line, where did it bottom? The summer of 2019. If you look at this trend line, where does it bottom? Summer of 2023. I mean, like, it's just the same thing, right? Solana Bitcoin, obviously, I'm still very bearish on. I mean, you can see it's still in a fairly convincing downtrend. It is within the bull market support band right now, so it is showing that it has at least a little bit of a kick left in it. But I do think that the macro downtrend will prevail. AVAX Bitcoin is slowly deteriorating itself. Again, a fairly convincing rejection off the bull market support band. No major breakout. Currently coming in at 8,600 or just over 8,600 Satoshis itself. BNB Bitcoin is obviously the talk of the town. I talked about this a little bit earlier in the Telegram channel. We actually seen a lot of these patterns in all Bitcoin pairs. We saw the same thing on the Ether Bitcoin pair. And I mean, if you go look, if we briefly just go look at the Ether Bitcoin pair, I remember talking about this. I believe I talked about it in the Telegram channel. If not, I think it might be in one of the videos. But if you remember, we were sort of looking at some type of a similar pattern on the Ether Bitcoin pair, sort of this like, rising wedge or whatever the kids are calling it these days, where it gets some type of fake breakout, everyone YOLOs in, and then it comes back down. Now, admittedly, here Ethereum rallied back into the merge, which we said would likely happen, right? I said Ethereum's Bitcoin valuation will likely put in a new local high compared to where it was over here at the first distribution, but Ether USD will likely not. And that's actually what happened. I mean, Ether Bitcoin went higher, but Ether USD did not go back above 2K, right? I mean, Ether USD got hung out. I mean, it still just ended up hanging out at around 1800. It did not make a higher high on the USD pair. So, I mean, that's something to consider too. But again, going back to that idea of the Ether Bitcoin sort of that wedge that it broke out to the upside and it sustained it for a few days and then it broke down. I think you're likely seeing something similar on the BNB Bitcoin pair. And I actually don't take this analysis as me being upset because I don't own any. I mean, I'm not really into altcoins right now, if I'm being completely honest. But I'm following it because I'm interested in picking up some. When I think the time is right. I don't think the time is right now, but I'm just following it a little bit more closely, because I think I will likely add it to my stack at some point. So I'm looking for some type of, if it follows what Ether Bitcoin did, you might see it break out a little bit. And then sort of likely see some type of short-term pullback on it. So that's also something I think that's worth following here in the short term. Okay, futures right now on the Nasdaq putting in even new lows. Same thing with the S&P. I mean, it looks like it's obviously not off to a great start. Doesn't really mean anything. I mean, we still could have a green week in traditional markets, which wouldn't be the worst thing in the world if we did. And the reason I say that, you might wonder, like, why do I always make it sound like I don't necessarily want it to go down in any given week? The reason is because I think the macro looks bad. So the longer Bitcoin and major indices can just sort of hang out where they are, probably the better, right? Because then hopefully the macro can start to look better at some point, and then we have a more convincing technical bottom on a lot of these assets. So I'm fine with things just kind of hanging out where they are. For the most part, but I mean, I'd be lying if I didn't say I really just had like a sustained bearish bias for the entire year, right? I mean, that's just what it is. As I've said before, I mean, it's fine to be bearish if you feel like you have enough reasons to support it, and I think there's plenty of reasons to support it. So yeah, I mean, I do hope that these videos are helpful in this time. I hope they're not too repetitive, but we just simply are in a phase where cash has remained king for quite some time, and I mean, we'll eventually get to different market conditions, but I just simply do not think we are there quite yet. The main thing that I think is worthwhile to follow are, what will traditional markets do this week? Will they see a bounce? I do know that the Nasdaq has actually just closed below its 200-week SMA, which is a pretty big deal. It hasn't done that in a long time. So if I pull it up, the 200-week, right? It closed below the 200-week. That didn't even happen in March of 2020. So pretty big pullback there. The last time the Nasdaq closed below it, I mean, maybe you could argue something in here, but I mean, look at this, right? I mean, this was 2008, right? And 2001. Look, the warning signs are there. The warning signs have been there all year. I've said before, don't fight the Fed, okay? They provide the liquidity to the system. We need cheap liquidity for risk assets to do well. If they're draining the liquidity, doesn't mean that we can't all stand around the pool and throw in some of our money and temporarily see the water rise. But the drain is still unplugged, right? I mean, like the plug at the bottom of the pool is not there. Liquidity is draining out, right? So you can throw some, if we all throw in enough water at the same time, it can temporarily go up. But the Fed, don't fight the Fed, right? Don't fight the Fed. So again, I mean, this is just my general stance. I do hope that we can get into some really great value, not only in crypto, but also in traditional markets as well. The thing I told you guys many months ago, early 2022, mid 2022, I'll say it again in Q4, or I'll say it again. Look, bear markets suck. They're awful. No one really likes them. Even if you plan for them, like even if you've been stacking cash, and you're somewhat euphoric because the prices are going down, you still it still just is more fun in general for it to just be a bull market, right? Like it's nice to just sort of DCA into the market and just slowly see the asset class go higher, right? That's a better time. Everyone's happier during that time than when the market is going down. But with that said, that's where all the real money is made, my friends, not the bull market, okay? Bull markets make you money, bear markets make you rich. The way that a bear market makes you rich is because you have to be patient through it, and then you come in when it's the right time, okay? And I've said before, don't blow all your money YOLOing into the altcoin dips all the way down in 2022. Okay, that's the one great way to lose all your money, because it's happened to me. I mean, I did it in 2014 and to a lesser extent in 2018 and really none at all in 2022. I'm just like, fool me once, shame on you. Fool me twice, shame on me. Not going to be fooled a third time. So maybe this is the time it won't happen, right? But these are where the real opportunities are made. A lot of people look at the NASDAQ and look how brutal this was and just say, gosh, that was so brutal. Like, how, don't look at it like that, right? Look at the opportunity that came from it, right? Look at the opportunity that was presented, not necessarily how brutal it would have been during that time. So that's what we're seeking, right? We're seeking that opportunity, that really great opportunity that doesn't come around that often. It doesn't. Even in crypto, I mean every few years we see it happen, but in traditional markets, these types of opportunities don't really happen that often. The NASDAQ hasn't been at the 200-week SMA since 2010. I think about that for a second. In 2010, I mean, I was in college, right? I mean, I was 20 years old. 2010 was a long time ago. That was the last time the NASDAQ was at the 200-week SMA. If we continue to drop like this, like we did in 2001 and 2008, this is really where real opportunities, I think, are coming. I don't know how bad it will get, although I would suspect it could get significantly worse than where it is right now. And if it does, try not to worry so much about exactly where it stops, but look at the opportunity. And even in the NASDAQ, I mean, if you bought this dip and you felt like a genius because you saw this nice rally, yeah, like it would have sucked in the short term. But look, I mean, what investor bought here feels bad about themselves over here, right? I mean, yeah, this is over 20 years, but that's what I want us to get back to. We're having some type of, we're resetting ourselves a bit, okay? The Fed's got to get inflation back down. Therefore, they're raising the interest rates. They have to do it. They're going through QT. They have to do it to get inflation back down. Unemployment's still low. So we're getting that opportunity that I do think is in the process of presenting itself to all of us. Okay? So try and be patient. And I think we'll eventually get to where we're going. That'll wrap it up. Thank you guys for tuning in. See you next time. Bye.